Welcome back to the channel. I'm Osborne Foreman, and in today's video I'm going to be giving a stock analysis on Ambev, ticker symbol ABEV, listed on the New York Stock Exchange. If you like the video, please drop one of these to help beat that YouTube algorithm. A long-term viewer had suggested this as this is a paid request. As you may know, I don't usually cover US stocks, and this would actually be the first US stock that I'm dedicating a stock analysis video to, and obviously this was a paid request by a gentleman named Mark. He had mentioned that it was another big holding of his and that maybe he was too easily lured in by the pandemic recovery play, but again, potentially their advantages could be quite good and positive, and he sees alcohol as potentially something that is recession proof, and so I would like to give my views on this and we'll see how it goes. When we look at the fundamentals and financials of Ambev, we can see that actually they are quite high quality. And looking at their past performance in particular, their earnings are consistent with their revenue. They have fairly high profit margins of 22.8%, and their revenue seems to be growing. I imagine there was some artificial growth during the last year as the pandemic and the lockdown may have meant that more people, for whatever reason, were purchasing more of their products, and this may be something that would taper off, but we're getting well into 2021 and it seems to be still going up, so this is interesting to see. It's even more positive when we see that their free cash flows remain quite consistent as well. However, when we go back from around about 2016 to about 2020, we can see that roughly their revenue and profits were somewhat sideways. They did grow their revenue by about 6 billion. I believe this is Brazilian currency, and I don't know what that is, but 6 billion there, but their earnings remained very flat in that time period. However, their financial health is pretty high quality. In fact, I was very impressed when I saw it, but I wasn't expecting it to be as good as it is. They've got rising levels of equity, decreasing levels of debt. Their debt to equity ratio has been consistently decreasing for the last 5 to 6 years, and they've even got rising levels of cash, a very positive sign to see. They do also pay a dividend that currently yields 3.05%. This isn't too high, this isn't too low. I think this is a comfortable spot for it. However, the stability and the growth of their dividends hasn't been that great, but then again, don't forget that also their earnings had been very flat until the last year, in which it had pushed up, but their current payout ratio is only 49%, suggesting that they can reinvest 51% of their earnings back into the business. Before I carry on looking at the fundamentals, it's important to understand that Ambev S.A or South America is owned, and this is owned with the ownership, let's go down here, by Anheuser or AB InBev, and I believe there's another subsidiary in between this. AB InBev is the entire brand, and this is through constant mergers and acquisitions, and I believe I have a Wikipedia page here for us in which there was quite a few complicated mergers. 1999, Brahma and Antarctica were merged, and then again there was another merger that was, I believe, a little bit later on. In 2004, they merged with Interbrew to form InBev, and then in 2016, InBev merged with AB to produce AB InBev. So this gets very complicated, and knowing what brands they own also is a bit of a grey area. In particular, looking on the Ambev site, there are a few that I recognise here, such as Corona, Budweiser, Beck's, and I believe Leffe, and I think Stella, of course, as you would know. But I'm not sure how the brands work, because I understand that it's owned by the other. This is owned by, obviously, their parent company, AB InBev, which, as you can see, it's the same sort of brands here. So I'm a bit curious to see how that rolls, or if this is just a subsidiary that markets itself, particularly in South America. But when we go back to what I was talking about, and we look actually at the company overview, it does say that it produces, distributes, sells draft beer, carbonated drinks, and other non-alcoholic beverages in the Americas. So it's likely that it is key down to this region. Another important thing to mention is that actually they also sell some of PepsiCo's brands, and they are, I believe, the lead seller of this. So when we go back to the Wikipedia page, and I know obviously Wikipedia isn't the most reliable of websites, but this is the information I've found. They are the largest PepsiCo bottler outside of the United States, and it sells and distributes their products in Brazil and other Latin America countries, which includes obviously Pepsi, Lipton Iced Tea, Gatorade, by agreements in their franchises. They also offer beers primarily under Skol, Brahma and Antarctica brands, but they also provide obviously the soft drinks as such that I have mentioned before. Their ownership is going to look very flat because yes, they're held by the company, which I believe is Interbrew, and then that's held by AB InBev. It's quite complicated, and honestly, I'm actually struggling to wrap my head around the whole idea of it, and so it does confuse me to say the least, because I believe all three of these, so the parent company of Ambev, which is, I believe, Interbrew, and the parent company, which is AB InBrew, I believe, in AB InBev, is also listed. I don't know how this possibly works, and it's definitely quite tough to wrap your head around. And for something where my investment strategy is to typically invest in simple companies, I like ones that you can clearly understand. You can understand why they're going to grow. I believe at least the ownership perspective of this stock is something that is a little bit more confusing. And if I am right to remember, this is listed on the New York Stock Exchange, but this is an American depository receipt. So obviously, and I believe this doesn't count as proper ownership of the shares. I'm not entirely sure. This may mean you forfeit some voting rights, but I need to do further research on ADRs, that's for sure. And then going back to their dividend history has obviously been very shaky. According to Seeking Alpha, over a 10-year period, we can see that it's pretty much been quite flat from about 2015. They've been paying, I believe this is done quarterly, which is quite annoying, to be honest. I'd rather it wasn't, but you can see that it, at least from 2020, it was quite high, and it slowed down in 2021, although we've not had the full year of 2021 just yet, which you would see in their annual report, which this is from 2020. I believe this was up until the end of December 2020, and so their annual report is likely due in the next few months or so. But I was particularly interested by what the chairman had actually said. And this was about that right at the start of the pandemic, they turned their ethanol from their breweries into millions of units of hand sanitizer. They distributed this to 146 cities, with 3.3 million going to Brazil alone, and 2.1 million bottles were donated to the TSE to ensure safe elections in 2020. I like this. This is showing a capable management that are flexible and are able to adhere to the demands of the current business environment. They pivoted out of primarily just an alcohol business model and moved towards hand sanitizers. Whilst obviously now I feel that hand sanitizers aren't really as popular, this, you need to remember, was a year ago, and I think they reacted well given the products available that they had. And I think they've been rewarded with this, with their revenue growth that we were looking at earlier. They have had, as I said, impressive financial growth, and you've got to remember, this is a big company. This is a company, in fact, valued lower than their revenue, if I'm right. Let's go up to the company overview and we will see. Now, that is particularly confusing. I think this might be an error, perhaps, with Simply Wall Street, the site I'm using. But it says their market cap here is 44.5 billion. But it also says that obviously their revenue is 69 billion. So perhaps this market cap is the one of actually their listing in the New York Stock Exchange, maybe more of a split. And maybe this ADR actually does have a weighting and voting rights percentage. And so this is how much this specific listing takes up, which would make more sense now that I think about it. However, the given market cap here is 253 billion. And they're trading at roughly a 3.6 price to sales ratio. But because they have those high profit margins of roughly 22.5%, this means they're only trading at a 16 price to earnings ratio, which is much better than the industry, but in line with the market, which would obviously suggest that investors perhaps are less bullish on the company compared to others in the industry. Maybe they don't feel that they have enough to value. Perhaps their competitors like Heineken and other big brewers could be more of a concern, although we've got to remember that this is diversified in the Americas rather than more of a global thing. And I think this is where it all gets quite confusing, because then I believe AB InBev is therefore worldwide, and this is just their America's beverage company, which it poses the question, if you don't live in the Americas or you don't have much exposure there, I can understand wanting perhaps some diversification being protection against ignorance, and you want some exposure to that part of the world. But if you don't live there, how can you understand how well these brands are doing? Obviously, they have some huge market leaders and they're doing quite well. And I believe it said that on their annual report, in which they had a record market share in Chile and Bolivia. But again, if you're not living there and you don't understand really what's going on, how can you see that this is a good investment case? Why would you invest for Ambev or in shares of ABEV instead of going for the larger parent company? Although The parent company itself, I believe, is of a worse quality. I believe they had quite high amounts of debt and very limited cash available. So there is obviously thesis to both. Which one would you buy? I understand, obviously, as I'm saying, if you want diversification into the Americas, you understand it. You've grown up or you've lived in Brazil for many years. You've been and traveled around the area. You can see that they've got very big brand dominance, perhaps with their bottles of Corona or perhaps some of their other local brands that are doing quite well. Then that makes sense. Again, if they are the largest bottler, second largest bottler for PepsiCo, then obviously they do have some staying power. They're likely not going away anywhere time soon. I butchered that whole sentence, but you get the point. So this is a company that's likely more of a stable company, one that's going to continue being around. And because they obviously are diversified into soft drinks as well as alcohol, as mentioned earlier by Mark, they could be seen as recession-proof. These are the kind of items that someone is not going to cut from their budget. They might go, oh yes, I'm going to cut down the prices, I might get cheaper soda, I might get cheaper beers, but ultimately with the amount of brands that they own, it's likely that they will be still buying from them. So you could see in times of economic turmoil that this company would continue. However, again, in times of economic growth, perhaps this company isn't doing too particularly well. But then again, the last year, that would negate my whole idea about that. And so it would make a lot of sense if I was, in this case, wrong. I do like that their agenda, and they are very much focused on ESG, environmental, social, and governance. And this is certainly a trend that we're looking at in the medium to longer term future, and something that clearly a lot of companies are picking up on. They've made quite a few steps into this. They're looking to create a 75% reduction in CO2 emissions and cut monthly water and energy consumption by 40%. They're looking to process 100% of recyclable waste and co-processing of organic waste. They're looking to really take an initiative to lower consumption, which includes motion detectors, dimmers, and LED lighting. They're really trying to look across all parts of the chain and improve themselves like that. And so in this case, in the way they've pushed their agenda, it looks very positive. So those that are looking for a more ethical, looking for what a company that is really trying to protect the world as it's growing itself, and this could also be a good play. Then again, as I said earlier, it was a 3.05, believe in percentage dividend yield. This is quite a nice dividend. It's not too high. If it was too high, then perhaps that would be a red flag as to what's going on. They've got room to grow this dividend, and so it could seem like a good, consistent dividend payer. I think seeking alpha, and believe me, I don't use this too much, but it may only seem like they pay a dividend bi-annually, at least in 2021, or maybe even annual based on that. And since the pay dates are so infrequent or perhaps jittery over the last few years, I can't be too sure as to when they plan to pay it, as it seems to be like they're paying it pretty much in every sort of month. Although it looks like back in 2014, 2015, they were paying very frequently. So perhaps it was more of a quarterly, and maybe they were adding some extra dividends on top. Although their share price itself hasn't really been that positive. And when we look actually at the company overview and into their share price here, the last year they've been trading flat. The last 3 years they're down a fair bit, 5 years, and it's a consistent trend that we've seen over this time period. This Simply Wall Street only goes back to 2013. I imagine perhaps that's when the listing of this ADR was, but the actual company itself has seen some impressive growth since all the way back 20 odd years. So it would be wondering, is it time to buy? Because yeah, you could look at this chart and go, oh, well, that's a red flag, I'm not interested. But again, you could zoom out a bit. You could look in the 3 months and go, perhaps, or even in a month period. Okay, the point I'm trying to make is that if you zoom in even further, it might be a point where actually it's been downtrending, but then you buy at this sort of price and actually you've made yourself a fantastic bargain. I don't invest on price targets. However, I do like to look at valuation. We've seen their price to sales is roughly 3.6 times, their price to earnings is 16 times, and their valuation on a price to book ratio is 2.9 times, which is a little bit higher than the market, but less than the industry. And this is bolstered by their levels of cash, but do remember that they are regularly distributing this cash to shareholders in the form of a dividend, so the price to book ratio is obviously going to look higher. And unless they're constantly reevaluating all of their properties on a price to book ratio, a lot of companies are always going to seem like they are at a premium. I quite like Ambev. They look like they've got a promising business model. They've looked like they were in a decent quality, although I am averse due to perhaps a lack of understanding of the markets that are ongoing in the Americas. I may be more interested in their parent company, which is AB InBev. I screw this up every time. Which, let's see if there's an American listing just to make this easy, which is listed as Bud. However, I remember looking at this in the past, and I have a feeling that their financial health was quite a concern, and in this case, it particularly is. So perhaps that's the point. You go for the niche, you go for just the Americas part of the business that looks like it's doing very well, and that could be a quality stock for the long-term future. Not something I will personally buy, but I do like the business model, and I do think that if you wanted a dividend payer in your portfolio that was perhaps consistent, maybe somewhat recession-proof, then Ambev is likely the way to go. I'd like to thank Mark for putting the paid request in for this stock, and if you enjoyed the video, once more, please drop one of these to help support that channel. If you're interested in my other stock analysis, such as my stock analysis on Games Workshop, then click the card at the top right of the video. Thank you for watching. Have a fantastic weekend.